Hello. In this video, we're going to explore the evolving role of the management accountant into a more strategic role than has historically been the case. We will examine the driving forces behind this changing role and consider the focus that the role now gives necessarily to external benchmarking and gap analysis. 100 years ago, the role of the management accountant was preoccupied with the production of data predominantly relating to cost. 100 years ago, the world moved at a slower pace. Technological developments were not as rapid as they are now, and competition was nowhere near as intense. It was therefore reasonable to assume little change in the operating environment and to focus on efficiency and cost reduction as the primary driver of profit growth. In addition, accounting systems were manual and very labour-intensive. Much of the accountant's time was spent maintaining and reviewing manual ledgers, and for example spending protracted periods of time trying to identify why a trial balance doesn't in fact balance. The management accountants would manage a team of cost accountants and clerks to help them produce this information. The role of the accountant has changed significantly since those times. Burns and Scapens concluded that there were three major driving forces behind the changes that have beset the accountant's role. Technology. Much accounting information is produced automatically in the modern world. For example, a sale captured on a website may never be reviewed by the human eye as the transaction works its way through to a set of financial statements. This frees up the accountant's time for other things that should hopefully add more value to the business. Management structure. Organisations have become increasingly de-layered, with management empowered and responsible for their own area of the business. This often includes preparing their own budgets and their own commentaries when comparing actual to plan. The accountant tends to be a facilitator in the process more than the person executing the process. This again frees up the accountant's time. And finally, competition. The world is an increasingly competitive place. Information technology makes marketplaces global and highly responsive. Organisations can no longer ignore the environment when trying to measure or manage their performance. The modern role of the management accountant has been given the title of strategic management accounting, which tends to mean the accountant is externally focused, forward-looking, in other words, considering what drives future performance in priority to measuring past performance, considers financial and non-financial data, and helps formulate strategy as well as measuring the quality of its execution. The strategic management accountant is a business partner with commercial focus. They can assist the board in an organisation at every step in the strategic planning process. They can help the board analyse and understand the environment. They can help the board make strategic choices, for example by informing their views as to whether alternatives are suitable. Are they likely to work, for example appraising them in light of wider objectives? Acceptable to stakeholders, for example measuring the likely risk and return of options? And feasible. Are options possible? Can the company afford it, for example? In assessing performance in context, benchmarking provides information to inform this analysis. Benchmarking is the process of comparing your performance to somebody else with a view to learning from them and improving your own performance. There are three types of benchmarking. Internal, for example comparing one branch to another branch within the same business. Competitive, for example comparing your performance with your immediate competitor. And functional, also known as process or activity benchmarking, which is to compare an activity in your business with a similar activity elsewhere. For example, you might compare the performance of your IT help desk with the IT help desk of a business in a different industry. The process of benchmarking is as follows. Firstly, set objectives. Decide what you're going to benchmark. For example, this may be based on critical success factors. Secondly, identify the key performance indicators that you feel best reflect the measurement of performance in relation to those objectives. Thirdly, select your benchmarking partner. They should be sufficiently similar to you for you to learn from them. There's no point in benchmarking against a fundamentally different organisation if the comparisons are meaningless. Fourthly, measure your performance and measure their performance. Ideally, their cooperation would be useful and may well benefit them as well. This can be difficult with competitive benchmarking when the use of publicly available information will need to be the focus, unless the benchmarking partner is prepared to cooperate through an independent third party for mutual benefit. Fifth, identify the size of any gap between your performance and theirs. Then, brainstorm ideas and create a plan for bridging the gap, and roll that plan out. And finally, revisit the benchmarking exercise frequently. Benchmarking has lots of advantages. It should be motivational, as it's self-evident that improvements can be made. It's a healthy exercise and encourages rethinking operations to improve performance. It's learning from the environment, and if revisited frequently, should discourage complacency. However, benchmarking takes time, money, and takes the focus of management. It's also potentially encouraging us to copy others rather than do something different to beat them. And finally, it gives no answers. It only shows that improvements can be made, not how to make those improvements. Strategic management accountants can also get involved in measuring gaps between anticipated and desired performance. They even produce information formally in what is known as a gap analysis. When ideas are floated to close the gaps, the strategic management accountant can be involved in quantifying how successful those ideas might be in doing so. In summary, the role of the accountant has evolved immensely in recent years to keep that role fit for purpose in a modern, competitive environment.